Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is daily analytical report where I will show you what is going on the market, and we'll try to look for decent trading setups and the best trading occasions on the market. So let's start, and as always we have to start with the macro calendar. So this is the calendar, and today the calendar is very busy. So what is happening here is we will have a speech from Governor Polos. We will have PMIs from Canada. We will have PMIs from US. We already had trade data from Australia. Initial jobless claims, ADP employment change. So all the data that for example, on Wednesday, the markets were closed, so ADP is usually published on Wednesdays. Anyway, Friday will be the day where we'll have the most important data with non-farm payrolls, with also speech from Jerome Powell, from job data from Canada. So Thursday is okay, but Friday will be the most important thing. Also look at this OPEC meeting. We do have an OPEC meeting today. Oil is in a very interesting place, so definitely that will be important. What is more, we have interesting information from Canada, where CFO of Huawei, which is the leading mobile producer in China, was, well, let's say, captured by the police in Canada. So definitely interesting finding, interesting news. And apparently this is the main reason of the drops that we can see on the stocks. This is the main reason for the risk aversion right now. So Canada, as we said, has arrested Huawei's global CFO. It happened in Vancouver. China embassy, obviously, in Canada demands immediate release of CFO, and this is the latest development. Itself, it shouldn't be so influential, but the thing is that we all know we are in the middle of those trade wars, and this situation may implicate further action in terms of those trade wars between China and US, or China and the rest of the world, or we will see. Anyways, this is the main reason for the risk aversion right now, which could be seen on gold and on stocks, for example. So with that being said, let me show you what is happening on the charts. We can start with Australian dollar to the American dollar, where this movement, gap closing movement, was pretty strong, as you can see, and it wasn't all, because after closing the gap, the price went below this orange support. And if you don't know this orange support, this is a neckline of this inverse head and shoulder formation. So what happened in the meantime is also the price created a triple top formation, and if depends how we will drive this neckline, but if we will drive it like this, we are now breaking the neckline of this triple top formation, which can be pretty significant and can bring us a proper sell signal on the Australian dollar to American dollar. But to be honest with you, I think that we already have a sell signal after this false breakout above the neckline. So in my opinion, there is a negative situation on the Australian dollar to American dollar, and we should see a continuation. We should see a further drop on this instrument. Next one is cable. So cable is disrespecting this horizontal support. So I don't think that there is this horizontal support anymore. There is still, I don't also think that there is this dynamic support anymore. I think that with the attention is shifted towards this horizontal one, right? Or even this, to be precise. So this is the most important level. I don't think that any trader in the world enjoys what is happening now on cable. Look, upswing, denied, upswing denied, upswing denied, upswing denied, downswing denied, upswing denied. So every movement is then reversed. Maybe if you go for reversal, you like this kind of a play. Well, I don't like. I like to see trends. I like to see nice movements, and I don't like this kind of play. So I stay away from the cable. But according to this recent movements, now we had a drop, so we should have an upswing, then a drop, then an upswing, and it should continue. Next one is Euro to British Pounds, where we do have an inverse head and shoulder formation, but we are still waiting for the neckline, for the breakout of the neckline, and you can see that the price moves just sideways, so it's not really interesting. The price does not want to break the neckline, does not want to bounce. We are just waiting. I guess that we are waiting for the vote in the Commons, which will happen next week. So traders, basically what is happening is that traders do not want to make any decisions right now, any important decisions. They are avoiding buying or selling pound at the moment. New Zealand dollar to American dollar. This is one of the best currencies, New Zealand dollar right now. And what we are having here is a proper upswing, then a correction, upswing again, correction, upswing again, and a correction. We closed the bullish gap. Okay, fair enough. We came back below the support, but it was only like the most recent support. The main one is the green one here. And in my opinion, as long as we stay above the green area, the sentiment is still positive and we should see the further upswing. So price can go as deep as here, and after this we can have a bullish reversal, and this is my scenario for New Zealand dollar to the American dollar right now. And now Bitcoin, because Bitcoin recently, as we said, created this pennant formation here. Yesterday we had a breakout of the lower line of this pennant, which brought us a sell signal. Today we do have a small reversal, but it's really small, as we said. So I think that as long as we stay below this upper black line, the sentiment is still negative and we should see a further decline. And in my opinion, the best target for this decline is the lower blue area. And if you're wondering where is that coming from, it's coming from here. So it's coming from the resistance from June 2017, a resistance from July 2017, and a support from September 2017. In my opinion, that is a good that is a good target for Bitcoin. Oil will be influenced by the OPEC meeting, but I think that we should have a downswing from the technical point of view. And the setup here is really sweet. So let me explain you that in a bit greater detail. What is happening here on oil? We do have a strong downtrend, and you already know about this. The price went below the most important support, so here 61.8, because 61.8 Fibonacci in terms of the dollars, it's 55.10, let's say. That were the resistance from December 2016, January, February 2017. After the breakout, it became a support in November 2017. It was a support also in November 2018. After the breakout, it became a resistance. So the price went there, right? Okay, let's leave the daily chart. Price went there, created three candles with long tail, with long heads, especially two candles here. Also, in addition to that, we do have a combination of 61.8 Fibonacci along with the long-term downtrend line here, and that is a legitimate signal to sell. If we also see the hourly chart, what we have here is a head and shoulder pattern. So a left shoulder head and a right shoulder breakout of the neckline is a legitimate signal to go short. So we do have this breakout, and the price is going lower. I think we can adjust this line here. That brings us a sell signal. Obviously, oil will be influenced by the OPEC. If they say that they will cut more, then we will have a reversal. If there will be no cut, we should see a further drop. So this is the situation. If there was no OPEC meeting today, that would be the best trading pattern. The sell signal here would be absolutely the best from the technical point of view. So I would be a huge fan of this pattern here, but we do have OPEC meeting. So during OPEC meeting, everything is possible. Now dollar index, as you can see, we are still under the influence of this false breakout of the long-term uptrend line. The price reversed, came back above the horizontal resistance, and now is pushing kind of higher. The base scenario in this case on dollar index is the breakout of the upper line of the triangle, and in my opinion this should happen, and the price after this should be aiming higher. S&P 500, what is happening here? We have a further drop. So 2 days ago was a very strong drop. Yesterday we tried a correction, and today we start with a strong drop as well. So it does not look good at all on the S&P 500, but we are still in a sideways trend. So I think the price can bounce from here, go here, and go here. Only the breakout of either the gray support or the green resistance should give us a legitimate trading signal. As for now, there is no signal. Australian dollar to Japanese yen, so they closed this gap, they went inside of the flag. All this can be considered as a false breakout. And I think that the price is currently on the most important line ever for this pair. So we do have a combination of the horizontal support, which is on 50% Fibo, but also lows from the 20th of November and lows from the 2nd of November. And also, apart from the horizontal support, we do have a dynamic support here. From this point, the price can go higher. But also, if you're wondering why the drop is so strong, is because of this false breakout above the neckline of the inverse left shoulder head and a right shoulder pattern. So this is what is happening here. Price going down, price dropping below 50% Fibo is a sell signal, definitely. American dollar to Swiss franc. Here I do have a position on my account. I am looking for the short position here. Why? Look on the daily chart. What do we have here is a shooting star bouncing from the horizontal resistance. So short position, stop loss is above here. On H4 chart, it looks even more interesting because what we have here is a bearish engulfing and a shooting star. So double top formation on H1, 1, 2. And on H4 is a bearish engulfing and a shooting star. So this should result with a further drop. In my opinion, this is my outlook on the American dollar to Swiss franc. On the other hand, American dollar and Canadian dollar, we are having a strong upswing. Do not forget about the fact that Canadian dollar is a commodity currency, so when the price of the oil goes down, value of the Canadian dollar usually goes down too, and this is what is happening here. Also, we are under the influence of the false breakout from this channel up formation. The price went back again, so this is the reaction on the false breakout. Also, you can see that we beat the highs from the June 2018. Many sellers had probably stop loss orders above this level, so this is why we do have increased momentum. Because traders, those who are selling, they have their buy orders here, stop loss orders, which increase the momentum. We are above the green line, which gives us a proper buy signal here. Euro dollar surprisingly is the least interesting instrument on the majors. It was interesting 2 days ago, as you can see here, false breakout, reversal, but this momentum stopped a little bit recently, and actually we are in the middle of the triangle right now, which is the worst place to trade if you're in the middle of the triangle. But with all that together, also with the dollar index being after the false breakout, the chance for a drop here, so for the dollar strength, are much bigger than for the dollar weakness. And now 3 instruments that I mentioned on the Trading Sniper video. What do we have here is the DAX. And this is absolutely beautiful because DAX moves with gaps, and DAX closes those gaps. And most recently we have a gap from today which is not closed yet from the very beginning. This is the major neckline from the weekly chart. So we are below this neckline, which gives us a legitimate sell signal. Okay, fair enough. Look at the weekly chart here. This is the mother of all engulfing. So this is a bullish candle and bearish candle overlaps it entirely, which creates a bullish bearish engulfing. Anyway, that was a big picture. On the smaller picture, we do have inverse head and shoulder pattern, or triple bottom formation, if you will. The gap from the beginning of the week created by signal, but after this we tried to close the gap, and we did, but this became a false breakout after this. The price on our chart, it will be better. The price broke the horizontal support, dynamic support, another dynamic support. Yesterday we tried the correction, and today we wake up with new long-term lows. As you can see here now, DAX is on the lowest levels since December 2016, which is pretty remarkable. Okay, let's come back to the hourly chart. Look at those gaps. For example, from here. This gap was closed here. This gap was closed now. This gap was closed here. This gap was closed straight away. This gap was closed here, and this gap, I thought that they will like to close this gap because we do have a break. We opened here. I thought that they would close this gap and then go further, but DAX decided to do the otherwise. So instead of closing the gap, they broke the horizontal support straight away, and that creates a very negative surrounding for the DAX. This can be perceived as a very negative factor, and in my opinion it can result with a further drop. So we do have serious troubles on the DAX. I don't want to say that we didn't warn you, because we did. After the breakout of the neckline on DAX, we said that we should have a huge downswing. But what happened this week is beyond expectations. Look at this candle from this week. Only the one that broke the neckline was bigger in this year. And we didn't finish yet. It's Thursday. Once this breakout will be established, we can even think about going deeper. And now gold, because gold was trying to break this 38.2 for the second time. If you don't know why this 38.2 is important, look at this. All the Fibos are important here. 23.6, 38.2 was important here. but it comes not only from the FIBO but from the previous price movements. So beginning of October 2017 we have a bounce. On the June and July 2018 bounce after the breakout, test and test. So 2 days ago we had a test and a bounce, and now a test and a bounce. But this line is not a coincidence here. This is the neckline of the double top formation which we are having now. Double top formation, so 1, 2 will give you a sell signal once this orange line will be broken. As long as we stay above, we still have a chance for another test and maybe eventual breakout. The breakout of 38.2 will naturally create a target on 50% Fibonacci, which also was respected historically. As you can see here, a bounce as a support, then a bounce from as a resistance, and this level is on $1,261 for ounce. And well, on gold we are fighting to create a nice reversal at the end of the year. So we are high at the beginning of the year, then in the middle we had this huge drop, but buyers will try to leave the price higher at the end of the year. So this is the ultimate resistance for gold price, breaking those tops from 2018 and tops from 2016 and tops from 2014. That will be a super strong buy signal which can lead us at least to $1,530, and obviously maybe even here if this gold rush will continue. Another one is American dollar to Japanese yen, which was respecting this double bottom formation with a nice bounces here and here, but it's all gone right now. In the past 2 hours it's all wiped out. How is the American dollar on Swiss franc doing? It's also reversing, so we do have an escape from the American dollar recently. I thought that this support will be eventually defended 1-1. One bounce, second bounce, but as you can see we are now canceling this second bounce and the price is putting pressure on the support. The thing is that apart from the lower line of the symmetric triangle, that's not the only important support here, because look at the big picture. We do have a long-term uptrend line here, long-term uptrend line here, horizontal support here. So really we do have area with strong resistance, but with strong support, but also at the same time we do have an area with a strong resistance here. So there is no other option apart. We do have only two options: or break combination of super important supports, or break the ultimate resistance. So there's a lot of work ahead of the American dollar to Japanese yen, and after this, maybe after a few days, maybe in this end of December or beginning of the year, we should expect a huge movement here. Okay, my friends, that was the last instrument. So let me show you one more time briefly what is our view on the following key instruments. So on Australian dollar to American dollar, we do see a triple top formation and a potentially nice downswing. On cable, we see that the traders do not want to trade, so there is a sideways movement which is not enjoyable at all. So our view is mixed. We don't have a clear view on the British pound to American dollar. The same goes with euro to British pound, but here from the technical point of view we should see an upswing, so a weakness of the dollar and strength of the euro. On New Zealand dollar to American dollar, we do have a still positive situation as long as we are above the green line. On Bitcoin, we do have a negative situation and we should aim $3,000 for one Bitcoin. On oil, we should see a further drop, if not only the OPEC meeting, which can cancel even the best trading setup, but the trading setup here is bearish. On the dollar index, I do see a positive situation here. On S&P 500, negative. On Australian dollar to Japanese yen, we are on the ultimate support. If this one will be broken, we should see a further drop. On the American dollar to Swiss franc, we should see a further drop. On the American dollar to Canadian dollar, we should see a further upswing. On the euro to dollar, it rather looks negative. On the DAX, it looks super negative. On the gold, well, it depends. As long as we are above the orange buy signal, as long as we are below the blue sell signal. So as you can see, mixed. A breakout to the new highs buy signal, breakout to the orange line sell signal. And American dollar to Japanese yen, price getting here will give us a sell signal, but not pretty strong because we are still above major support. So my friends, thank you very much for attending this daily analytical report. I hope you enjoyed that, and see you in half an hour on the webinar about the technical analysis. In the meantime, visit our Twitter account and our website alpari.news. All the best, guys. Good luck.